Hey everyone, this is Dave Meyer with BiggerPockets here today to talk about one of the greatest debates that we have in real estate, which is cash flow versus appreciation. If you watched one of our recent videos, Zach Lemaster, the CEO of Rent to Retirement, who is joining us today, and I talked about the benefits of cash flow and some of the top cash flow markets that exist today in the United States. Today, we're going to look at the other side of the conversation and look at some of the highest appreciating markets in the US, talk about what type of investors and who should be looking for appreciation and how you can find great deals. So excited about this episode, and I am very excited to have my friend Zach Lemaster, CEO of Rent to Retirement, joining me again here today. Zach, how are you?
Dave, thanks so much for having me back. This is a pleasure. I'm super excited to talk about appreciation-based markets because as you and I were analyzing the different data and statistical information we were looking at, I think both of us were quite surprised on the markets that consistently came up to the top. So I think this will be a great episode for people to watch, and people are in for a surprise here.
Yeah, it's not probably what everyone thinks it's going to be when we get to those three markets, but these are three great markets, but there are many other great markets out there. And if you were looking for help in any of these three or any other markets that are appreciating and you're looking to invest in, make sure to find a great investor-friendly agent. You can find one for free on BiggerPockets. All you do is go to biggerpockets.com/agent finder. You can put in a little bit of information about who you are, what you're looking for, and you will get matched with a great investor-friendly agent who can help you navigate markets that Zach was talking about or any other market that you're interested in investing in. Before we get to the specifics, Zach, tell me how you think about appreciation. You know, there's obviously this debate, cash flow appreciation. Some of us look for both. How do you view appreciation in your own investing and in your business?
Yeah, and a lot of people, I think, Dave, fall into these categories of looking at investing as either cash flow or appreciation. And it's like you have to choose one or the other. And I think fundamentally that's just not true, especially as the market changes over time. And it's all a spectrum, in my opinion. So obviously, if you're in a strong appreciation market, it would be harder to cash flow with the same type of investing, financing and things like that as a lower priced market. However, we've been surprised that there are some areas where you can have strong cash flow and appreciation. One of my mentors always told me that when I first started investing in real estate, that cash flow provides income, but appreciation builds wealth. And I just keep thinking about that early on early on in our career path when we were flipping a lot of houses and trying to force appreciation. It was a lot of work. And looking back over the past decade or whatever, looking at just comparing those two properties where we bought in good markets and didn't rehab those, let those appreciate. Those properties way outperform the ones that we force the equity on. And so, these are important things to look at, but I think looking at a market where you can take advantage of both appreciation and cash flow is definitely the best way to go about it.
In my own analysis, I've looked at data back to 2010, I think. So basically post Great Recession. And what it shows is that some of the outliers for the best cash flow are also outliers for the worst appreciation. So there is some truth to this. Where think of a market like Detroit, Michigan. That's one that's exceptional cash flow, but poor appreciation up until the pandemic, which we'll talk about in just a minute. On the other end, you saw these markets like San Francisco, which from 2010 to 2020 saw this enormous appreciation, lower cash flow. But the vast majority of markets are exactly what Zach's talking about, which is there are both. And it might not have the best cash flow or it might not have the best appreciation. But as a combined market, when you look at the two drivers of profit together, you can find places that offer both. And we're going to talk about that today. I also just want to caveat when Zach mentioned something called forced appreciation, which is basically when you add value to a property and, when you're flipping a house, you're making a property better. What we're talking about today and the markets we're going to talk about today is what I would call quote unquote market appreciation, which is basically sort of these broad macroeconomic forces that are, tilting the balance of supply and demand in favor of upward prices. So that's sort of what we're going to talk about today. So I'm looking forward to that. So Zach, when you look for markets, because you do this all the time, that you think are going to appreciate, because we obviously don't know, but what are some of the things you think are good indicators of markets that appreciate well?
Yeah, and we don't want to overcomplicate this. Especially when we dive into the stats of things numbers can be overwhelming, but if you just think about it, when people are moving to an area, when there's new jobs created, that probably means that the market is positioned to appreciate. We also like to look at areas that, haven't already undergone where we're in the path of progress, where we're going to be positioned to have strong appreciation, areas that maybe haven't had this crazy appreciation run as many markets have over the past 5 years. And so looking at areas that are like at or below the median house price point. A lot of the markets, like the top 10 or 20 on the list, a lot of those areas we've never heard of before, right? So we had to go and actually Google them. But I think areas where, there's a lot of employers coming into these areas, we see this kind of national shift too. We talked about this last time, but where people are moving out of metro areas just for affordability and cost of living, especially if there's new jobs being created and they're commutable to a large metro area. Dave, those are some of the things that we look at, and I think the data that we're going to talk about will support that.
All right, great. Well, makes a lot of sense. Again, it all comes back to supply and demand. If you see places where people can afford to buy the homes, where people want to live, those are going to be really good indicators of appreciation in the near future. Zach referenced a list that we're looking at. And so there are tons of different ways that you can slice this data and look at it, but we wanted to keep this relatively simple. And so what Zach and I looked at for this video and discussion is appreciation over the last year-over-year data, and we've also looked at it over a 5-year period. And we thought that that was important because we obviously saw this explosion in housing prices during the pandemic years when interest rates dropped so low. And so we wanted to sort of just look back a little bit further back beyond that for our analysis. And so there's no right answer, but Zach has selected 3 markets that are phenomenal appreciation markets that are doing well, both in terms of year over year and 5-year appreciation marks. So Zach, why don't you share with us your first market that you picked?
We picked Evansville, Indiana, which most people, or I think many people would be like, well, where is that? They may have heard of Indianapolis, but Evansville is an area that has a population of roughly 120,000. It has a median household income of maybe about 150K, median household rent about a 1,200. But this is an area that's had really strong appreciation. It was one of the top markets, Dave, at both for the year over year for last year and or the 5-year appreciation. It has a good balance of renters to homeowners of about 50%. And it has a strong educated population of over 33% of people having college degrees. But what we really see, and I think the reason why this would be an appreciation-based market is just because of where it's positioned geographically. This is what we would call a secondary market, maybe not one of your prime metro areas, but if you pull this up on a map, what you'll find is it is smack dab in the middle of a lot of really large metropolitan areas. You have Indianapolis, you have Cincinnati, Nashville, Memphis, St. Louis, Springfield, Illinois, all within probably a 60 to 80 minute drive. And so there's a lot of distribution centers coming in here and a lot of jobs being created. So this is an area I think that is just really positioned for growth. And we've seen that over the past 5 years. Yeah,
I think this was actually the number 1 city on the entire list. We did omit some smaller cities, just so you know. We pulled basically the top 184 markets just based on transaction volume, because if you get into these cities that don't have a lot of home sales, it's a little wonky for the data. So what we looked at here, and it showed in 5 years, I had to double check this, Evansville has grown over 300% in terms of housing appreciation. So it is the number 1, and just in the last year, 19% year over year growth. So it obviously doing really well, and sounds like it has really strong fundamentals. Zach, just curious, in the debate, since you know a lot about Evansville, is that a place where you still can find cash flow if you're looking for that as well?
Absolutely. When we look at the median house price point and compared to the median rent in that area, we're not quite at the 1% rule, as I think we've ruled out quite some time ago as being a realistic expectation. But this is an area where you still have affordability. And I think this debunks one of the main misconceptions out there, Dave, that you have to get any appreciation, you have to be in a very expensive market. And this is a perfect example of where you simply don't. You can just be in an area where you still have affordable housing, where you can have a $150,000 or $200,000 B-class house and still cash flow on it even with current financing rates. So I'm excited about it. I don't know about you.
That's a great point about affordability, because even with all that tremendous growth here, the median home price in Evansville as of July 2023 is only about $230,000, which is 40% below the national median for home prices. So clearly, not everyone can afford that, but relative to the rest of the country, it is still a relatively affordable market. So yeah, this is a great one. And I do admit, Zach, I have never heard of Evansville. I don't know where it is. So this one is definitely new for me. What about your second market?
The second one we chose today to talk about is Canton, Ohio. Another one of these where people are just like, well, where would that be located? And
Football Hall of Fame, right? Isn't
there you go.
Okay, that's the only thing I know about it.
No, that's a good point that you brought that up, Dave, because actually that's going to play into the growth. Actually, there is a $600 million project currently underway, specifically with the Hall of Fame, that's projected to increase 10,000 new jobs over the next 5 years. And so that's bringing a lot of people to Canton, Ohio. So some people may have heard of it for that, but there's it's a huge healthcare area. On the cash flow markets that we analyzed, one of the top areas that we chose was Akron, Ohio, which is just maybe 30 minutes north of Canton. And so the Canton is positioned just south of Akron, which is south of Cleveland. But this is an area just like Evansville where you can actually have positive cash flow and you're positioned for appreciation as well. There's a lot of people moving to this area specifically because of the jobs being created. That was just one example. Amazon has one of the largest fulfillment centers in the Midwest going up in East Canton as well. So we like this area.
Yeah, this is one of those markets where, I think historically back to 2010, up to the pandemic, it hadn't been growing as quickly. It did appreciate it. It's not like things were going down, but it wasn't, leading the charge in any way. But just in the last year, it's been up 15%, likely because of some of the things that you're talking about here. And is this sort of one of those markets that, as you said earlier, you're looking for places that are trending up but haven't quite popped or seen their biggest growth yet? Would you qualify Canton as one of those markets?
I think so. I think we're in the early stages. I also don't think that this is going to be a market that's going to have crazy year over year appreciation. If we were to look at this, and it's important to understand what data points are we looking at. So if we were to look at this over a 10 or 15 year time period, this isn't going to become the next Cleveland, in my opinion. But it is positioned for strong appreciation. So a lot of the market information that we were looking at, we also have to understand, Dave, and I'd like to hear your opinion on this, but where we're at in the market cycle. Because right now, no one has a crystal ball, but I think we're at relatively probably about peak interest rates from what we've seen. The market has transitioned a lot over the past 18 months in a lot of areas, but a lot of the stats that we're looking at would kind of point to the fact that these kind of secondary markets or these areas that are not these huge metropolitan areas, which have already probably seen a little bit of a correction, these are real kind of stable bets long term, and we don't expect it maybe crazy appreciation long term, but these are areas where you still have strong fundamentals and appreciation and cash flow even in uncertain market times. What do you think?
Yeah, I think to your point, I mentioned this before, but the places that have crazy appreciation are usually ones where you can't find cash flow and are probably a little bit more volatile. If you look at the markets that grew the fastest during the pandemic, they are in large part the ones that are seeing the largest correction. So we talk about places like Boise or Austin or Las Vegas. They took off, and as an investor, sure, you probably like seeing it go up, but in the back of your mind, at least for me, I invest over a long time period. And so for me, I'd rather see 5% appreciation on a steady basis than, up 20% and then down 5%. To me, real estate, one of the benefits of real estate is the low volatility. And I like finding markets personally that have less volatility than a place like Reno or, I'm just picking some random cities that have seen a lot of volatility over the last few years.
Absolutely. If you can invest for the fundamentals where you have cash flow, but you're positioned for appreciation, I think that's the recipe for success long term.
Exactly, right? You want to find a place, for most of history before we got into the last few years where the zero interest rate policies have really sort of messed up data, at least. The housing market returned about a 2%. The appreciation was about 2% above inflation. And that's what most markets, in my opinion, are going to return to, which is still really good if you're earning cash flow. You're still outpacing and getting a real return. And then you have this option, this opportunity to take advantage of the upswings that do happen. They're very hard to predict when they're going to happen, but if you hold real estate for a long time, you're going to find these periods where appreciation is greater than that 2%. Meanwhile, you're still sort of getting cash flow, you're still getting amortization and paying down your loan. And so if you look at the total package, you're getting returns that are probably still better than the stock market. And then you still have that upside for appreciation in a lot of these markets. So totally agree with that. All right, let's move on to your third market. What do you got?
So this is a place that I think most people have heard of and is more familiar, because we're going to talk once again about Southwest Florida. This is an area that makes its way on almost every single list that we run, because there's just a lot happening there, a lot of people moving. So this would be Naples, Florida, which is just south of the last area that we talked about, which was Cape Coral.
All right, so what's going on in Naples?
So when you look at some information on Naples, it's a small area. The population is roughly 20,000 people, but that would be isolated to just the Naples, I guess, boundaries. But Southwest Florida, as we know, has a larger metropolitan area that has a larger population. But Naples is an area that is expensive. Like, this would be an area that would be hard to cash flow. I mean, Dave, you can tell us, but I think the average house price point in this area is probably close to $1 million. I didn't actually run that stat, but
the median, it's showing me 635,000, which is still extremely high in terms of the national average. It's about 50% higher than the national average, and has gone up like crazy over the last couple of years.
So this is an area I think it does have a large barrier of entry. I mean, a lot of the trends that we've talked about previously would be maybe true in this area, but I think Naples is an area where maybe more people are doing short-term rentals if you wanted to break into this area. One thing I think is unique about Naples is we compare East Coast to West Coast Florida, is that typically East Coast Florida, or along the coastline, is extremely expensive. We don't see a lot of the West Coast areas that are as expensive as the East Coast, but we're moving in that direction. So Naples still, relatively speaking, like if you just go, 100 miles to the west, from the west to the east, like prices are going to be dramatically higher. And I would argue that Naples is a more attractive location for many areas. So I still think we have a long runway of appreciation in Naples and Southwest Florida in general, just because of its positioning right on the coast.
Okay. So, yeah, Florida in general, obviously seeing huge appreciation, but this high barrier to entry, you said short-term rentals works. Would you consider trying to force appreciation in this market, or do you have any other tips for people who want to take advantage of appreciation in sort of these high-price markets, but are not willing to, forego cash flow completely?
I think to make the numbers work fundamentally in this area, probably new construction is the way that you can actually come into and possibly even have a little bit of immediate equity. But if you're trying to flip houses in this area and force appreciation, unless you're converting a house into, you're adding units or something like this, or you're converting it to a short-term rental, I think that's a way that you can possibly make existing homes cash flow in this area. But we do see a lot of new construction going up in this area where, month over month, the house prices are increasing. One thing that we didn't talk about, I think is important too to recognize, Dave, is that some of these areas, like we didn't actually run the numbers on rent appreciation. That might be interesting to do another episode on. But typically that goes hand in hand. Some of the Midwestern areas that we talked about, like Canton and Evansville, the rent appreciation in those areas, just because of the population growth in those areas, is actually much stronger than even the market appreciation. And I think that's another thing that's important to look at, rent, both appreciation in home prices, but also rents, because I think that even if you have limited cash flow, day one, because we have higher interest rates or whatever the case is, if you have strong rent appreciation, that means you probably are in a good area where you're going to have a stabilized house with a consistent tenant, but your rents are also going to go up, improving your cash flow position year after year.
Yeah, that's a great point, and probably a new episode that we should do. It would be great to look at sort of the rents, and that has been changing a lot over the last couple of months, so that's something we'll check out. So these are three really great markets. Just to summarize, we have Evansville, Indiana, we have Canton, Ohio, and we have Naples, Florida, all which are seeing double-digit year-over-year appreciation this year, and all have seen pretty significant appreciation over the last 5 years. Zach, I think before we go, I just want to ask, we picked markets, two are in the Midwest, one's in the South. A lot of the markets that have seen a ton of appreciation over the last, let's say, decade or 2 decades are in the West Coast. Is there a reason you didn't pick any of those markets?
We could probably talk about this all day, Dave, but I think
yes,
I think we share the same assumptions. And this doesn't mean that you can't have appreciation on the West Coast. You certainly have. But historically speaking, like the West Coast is where we've seen the strongest appreciation. And that's largely in part why it's hard to cash flow in these areas. But right now, we are also seeing a large population migration away from the West Coast because of people being able to work and live remotely in more affordable areas, even if their job still is based in that area. We're also seeing, taxes consistently going up. From an investment standpoint, just legislation is becoming challenging. Like Oregon, for example, was the first state to have statewide rent control and things like this. And so it's just becoming harder and harder from an investment standpoint to make the numbers work, even if you have strong appreciation. But right now, we're seeing a kind of this mass exodus of a lot of places in California and Seattle that are just so expensive because we've already gone through that strong appreciation wave. And so I think people to make a strong bet over the next 5 to 10 years would be in areas where, like the areas we just talked about, where a lot of this population is moving to. I mean, Dave, would you agree with that, or what do you think?
Yeah. In broad strokes, obviously, I asked you a question about like a giant swath of territory. It's like a third of the country. So there's obviously caveats in between there. But yeah, I mean, you do see it, specifically California, extremely expensive and really difficult to cash flow. And I think that's going to be difficult for investors, even if there is appreciation. I think, to me, I'm really curious to see how the work from home thing continues to play out. It's so far, there's a lot of news and media about work from home and people getting called back to the office. I saw something on Redfin the other day that said 1/10, so 10% of all home sales right now are because people are getting called back to the office and are having to move back. That's a lot, but it's not crazy. And so I think unless there is some big either decline in prices that make these big West Coast cities a bit more affordable, or there is once again a major economic reason for people to be there, like higher paying jobs, which is what fueled so much of that growth for, the last 20 years or so, that it's going to be a little bit softer there. And so I think for right now, I tend to agree, but want to avoid like making longer term predictions because these migration patterns are so new. We've never seen anything like this. And so I'm really just personally curious to see if they stick around or revert at all over the next couple of years.
Yeah, these are interesting times. It's completely dynamic. And that's why it's so valuable, Dave, all the data that you bring to the BiggerPockets community so everyone can stay up to speed on what's going on and make smart and savvy investment decisions. And as far as I know, thankfully, BiggerPockets hasn't changed their work from home policy. So I think you're safe.
No. At least for me, I'm still operating out of Europe. So that's working well for me. But thank you. And of course, we do, I appreciate that. And yeah, that's why we're doing these videos. It's helpful for people to understand, real estate has so many benefits, but it is really important to stay on top of these trends and understand based on your personal goals. If you're looking for more for cash flow, more for appreciation, I think Zach and I both agree that you should look for both, but it's a spectrum, right? Like you could, depending on your personal goals, you might be okay with slightly lower cash flow and more appreciation upside. And so staying informed on these topics and understanding the different options and different potential of different markets is super important. All right. Well, obviously these are 3 great markets, but there are many other great markets out there. And if you were looking for help in any of these 3 or any other markets that are appreciating and you're looking to invest in, make sure to find a great investor-friendly agent. You can find one for free on BiggerPockets. All you do is go to biggerpockets.com/agent finder. You can put in a little bit of information about who you are, what you're looking for, and you will get matched with a great investor-friendly agent who can help you navigate markets that Zach was talking about or any other market that you're interested in investing in. So Zach Lemaster, CEO of Rent to Retirement, thank you so much for joining us again and sharing us your knowledge and experience in these markets. We appreciate it. For BiggerPockets, my name is Dave Meyer, and we'll see you all again soon.